Welcome to Insights. I'm Eric. We're going to talk about the Russell 2000 again, or small cap stocks. I think the setup and the evolution of the trade is not really showing anything we can act upon, but I think it's really describing where we might be heading in the backdrop from 21 to 22, 2021, 22 time frame, economically speaking. The Russell 2000's here on line 30, number 32, line 36 in the matrix. It also measures relative performance, and it's just a shade behind the NASDAQ 100. So we'll have to see whether or not the industrials catch up and take over the lead, whether or not the Russell 2000. The Russell 2000 showing leadership. It backs the strong economy or recovering economy, which we're starting to see even down here in the EAC. The EAC is now 2 months old, but it just flipped up. We talked about that in an open review. I think in terms of like trading immediately, the Russell 2000 has been up for 6 months, and the bull cycle is past its mean. So it's a dangerous entry. There's a real buying panic to get into the Russell 2000 or the small caps, even though the time cycle is not very extended. This is still below zero, so 6 months is relatively early. But are we pushing up against a wall here in terms of the monthly time frame? It's possible. The weekly time frame is also extended past its normal cycle, and its price return cycle at 41% it's pretty high. I mean, the weekly return is substantial, and again, it's like you can only push these things so far before a correction materializes. If we back down into the daily, ultimately the daily is the most sensitive. Its price cycle is 4.2 and its time cycle is 2. So everything's after 60 days of rallying. The small caps are extended both in terms of price and time. So this is not something that you want to chase, but I'm sure everyone is doing that. Chasing is the thing to do when you don't have any trade discipline or trading investment discipline. You just do what everyone else is doing, and I caution against doing that. The evolution of the trade is very specific. We're triple up, but triple up, and it says it's mid-cycle, so this is not really something we're interested in. If it maintains and resets again, and the energy build picks up from here, which is something we're going to talk about in a second, a reset's going to be produced, and a reset is something that you can escalate the core position. So let's take a look at the energy build here quickly, as the Russell 2000 or small cap stocks plays a big role in the economic, whether it's sensitive to inflation or a pickup in the economy is really sensitive in terms of the Russell 2000. It'll do much better than the large cap Dow Industrials S&P 500 name. So we want to keep an eye on this closely in the coming weeks and months. The Russell 2000 leadership is important to drive to support the economy, and it's something that we're going to have to keep an eye on. This is the energy build for the Russell 2000. This is DI. DI is these measures down here. And as prices rallied and broken out, what's kind of surprising is DI has risen. Now, DI2 is still pretty negative and pretty low. There was a blocking dome that was generated here, and I'll highlight that. And it smashed through that. And what we're waiting for in a reset would be some type of bullish energy build. So normally the price would curl over and DI here would rise up. It could spike temporarily and then come back down, or a really strong correction would also send the DI2 much higher. DI2 and DIs have been much higher in the past, and it would go up in these regions if you were going to generate a significant entry point or a significant correction. So the fact that it's rallying from its low here is interesting. It either suggests people are worried about inflation, or they're worried that the economy is going to pick up and they don't want to be caught either short or outside the economically sensitive areas such as the Russell 2000. So I think this is something to watch over this week, in the coming weeks, and in February. If this rolls over, well, then this is just a small hiccup. If it continues on for several more weeks and months, the energy build, which is still, I would consider this bearish with a somewhat a bullish bias, but DI2 is what sets the tone. If this gets pulled higher and above zero, It's going to change the whole outlook for the anyone who invests in the U.S. equity markets. So from a standpoint of the Russell 2000, I think you need to keep watching this. Subscribers should keep a close eye on this going forward. Keep an eye on the energy builds. Hopefully these will reset both in a correction, but in this market nothing resets, but I doubt it. People are wrong. They chase when they should be conservative, and they're conservative when they should be buying or doing. They always do the opposite of what they should be doing. So this one, these readings and these cycles and time readings keep us on our hands for now. And keep an eye on the seasonality of the Russell 2000 too. That's something that you subscribers can watch. And I would watch the intermarket trend performance, the relative performance, whether or not the Russell 2000 climbs ahead and takes the lead in the coming weeks. That's going to be an important indication. So the Russell 2000 or small cap stocks are kind of the lifeblood of the U.S. economy. It's a part of the small cap arena. Small job creation creates more than almost 50% of the U.S. jobs in the United States. And if it starts to fall behind, it's bad. And if it starts to pick up, it's supportive. So we'll have to watch it going forward. If you have any questions on what you see here within our discussion about the small cap stocks or anything in the matrix, contact me directly through the blog or write some comments underneath this video, and subscribe to the channel if you like what you're seeing, because I can provide more content when I see it pop up. Other than that, thanks for watching the video and have a good trading day.